Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, a lot of activity in the investment community today and this week as earnings season kicks into full swing. And today we reviewed the latest financial results of three companies: Republic Financial Holdings Limited, Angostura Holdings Limited, and WITCO, or the West Indian Tobacco Company. Now, what do these three stocks have in common? A bank, an alcoholic beverage company, and a tobacco company. Well, in this case, these are three of the five companies that are being placed into the National Investment Fund, whose bond offering is currently open to the public. Let's take a look first at Republic Financial Holdings Limited. And in the case of all three stocks, there was improving financial performance, which is important for investors. So in the case of Republic Financial Holdings Limited, for the 9-month period ended June 30th, the group recorded earnings per share of just around $6.13, a 3.2% increase from the $5.94 recorded in the prior comparable period ended June 2017. Now, a lot of that, as we can see in terms of Republic's profit after tax trend, it's a very nice upward trend over the last 5 comparable periods, from just around 9 months, the 9 months of 2014 of around $900 million to its most current figure of around $1 billion. Now, this performance is quite commendable when placed into the context of very lackluster performance, or relatively lackluster performance, in its main operating jurisdiction of Trinidad and Tobago, accompanied by a higher taxation environment for RFHL. Now, importantly for RFHL is its 2G strategy, or geographical diversification into 2 jurisdictions, importantly Guyana and Ghana, with Guyana promising to be more important in the near term as relative to the Ghanaian economy. So at a price of just about 102.81 and trading at a price earnings multiple of around 13 times, which is below the banking sector average of 13.4 times, and with an attractive dividend yield of around 4.3% relative to the banking sector average of 3.7%, Bourse maintains its neutral rating on RFHL. Looking at Angostura Holdings Limited, for its 6-month period ended June 2018, the company recorded earnings per share of just around 23 cents, a 9.5% increase from the 21 cents recorded in the prior comparable period. Mostly green light items across the board. Revenues were up 8.1%, gross profits were up 10.1%. Selling and marketing expenses did increase around 16.1%, but overall profits were up just around 12.4%. Now, some of the company's initiatives in terms of increasing its distribution presence across the world, as well as local rum sales, would have contributed to an overall increase in performance. Heartening news for investors, certainly. After 3 consecutive periods of declining results, this has been the first very notable increase in profits after taxes for AHL for this particular period, again up 12.4%. Now, Angostura, at its current price of around $15.75, currently trades at a price earnings multiple of around 28 times, which is above the sector average, the manufacturing one sector average of 18 times, and offers on the lower end in terms of dividend yield of just around 1.3% currently, compared to the sector average of around 4.4%. So on that basis of improving performance, but again, some slightly elevated valuations, Bourse maintains its neutral rating on Angostura Holdings. Finally, turning to WITCO, and for the 6-month period ended June 2018, the company recorded earnings per share, a nice bounce back of $2.30 per share, an increase of around 8.5% from the $2.12 recorded in the prior comparable period. Again, a lot of green line items. Revenue was up 11.7%. Gross profits were up just around 14.7%, and profit before taxes were up 10.7%. Importantly, dividends per share for the comparable period did increase from $1.81 by a whopping 8.3% to $1.96 per share in the most recent period. Now, WITCO as well has faced significant struggles and headwinds given the black market competition of illicitly imported products, as well as increasing taxes at the top and bottom line. Now, despite these challenges, its positioning and initiatives in terms of repositioning some of its brands into cheaper segments seems to have paid off, with an 8.7% increase in profit after taxes for this most comparable period. So after a significant price adjustment in the past couple of months, and at a price of around $87 right now, WITCO is trading at a price earnings multiple of around 18.6 times, pretty much in line with the sector average of around 18 times, and offers a reasonably attractive dividend yield of 5.2% when compared to the sector average of 4.4%. So on that basis of some recovery, but we're still waiting to see if this recovery will be a persistent one, and more attractive valuations, Bourse maintains its neutral rating on WITCO. Now again, for those investors in the NIF, these three stocks importantly comprise just over 72% of the entire NIF portfolio. And what does that mean for investors in improving performance? Well, one, the potential or increased likelihood for higher cash flows into the fund by way of dividends, which will support coupon payments and bond repayments over time, as well as an increased likelihood of preserved stock price values and asset portfolio values for the NIF, which overall serves to reduce the risk for NIF bond holders as time passes by. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or visit our website at bourseinvestment.com. Have yourselves a wonderful investing week. This has been the Bourse Report.